What's going on, guys? SmartHelping.com here. We have a professional services or agency financial model. This has been fully upgraded. I'm going to review the entire template, all the different input tabs and output tabs. The recent upgrades have been additions of the income statement, balance sheet, cash flow statement, a new CapEx tab, and cap table. All the other original logic still works, and we'll go through that. So this is a 5-year monthly and annual template. You can define on the global control tab the name of the business, the launch year or start year of the forecast. This automatically fills in for the first month of the year. End month. This could be if you want to run like a 3-year or something other than 5 years, you can put the date to the end month at whatever month you want. You also have the flexibility to choose to include a terminal value or not. If you do, it'll be based on the trailing 12-month EBITDA times whatever multiple you enter here, and it will flow through to the various financial reports accordingly. Note, you can define revenue start months in the revenue tab. We'll get to that in a second. Also on the global control, you'll do cash sources, debt, um, the model solves for remaining equity required after accounting for that and all the startup costs and any burn. This is a number needed to keep a cash balance that's at least 0, never goes negative. And then there'll be assumptions on the cap table that will define the rest of these values you see here. You can also define some tax rates because this doesn't get into taxes. If you don't want to show that, you can zero them out. And note, you don't have to make this a joint venture. This could just be the owners are the only ones contributing capital, and that's fine. You would just define it on the cap table accordingly. These are all the checks to make sure all the different financial statements and monthly summaries all match. This should always read zeros all the way down, and you should be able to change any cells in light yellow. Note, all these numbers are arbitrary, so when you go in and fill this out, you want to make all the cells that are in yellow with blue text your own values based on your project. Revenue tab. So this is the main guts of the model. And so this is going to work for any business that has professionals billing out time, and then the agency or firm, it could be a law firm, CPA firm, whatever, uh, takes a cut of all those billable, or they'll take some percentage of those billables, and then the professional will get the remaining. And you could define all of that logic right here for the amount of billables retained by the firm. But if we start up here, you can define how many professionals you're launching with, the start month that billables begin, and then you could define the amount of professionals you're adding to the agency per month in year 1 here, and then you could do a percentage gain in each year, and this will be the monthly amount added. If you have a more granular way you want to do it, you can always just go into the monthly detail up here and just manually adjust this row 8. Otherwise, you can just drive it right from the revenue tab for the count of professionals over time. There's also some tenure tied to this if you want to account for the loss of hires over time as well as adding. It's almost like some of the logic you would see in a SaaS model, which is why this template is included in the software as a service bundle. As we go down here, you can define the percentage of new hires that fall into up to 3 professional types, and the professional types are granulated based on the start month, the billing rate, and the quota of billable hours, as well as the percentage of billables retained by the firm for each of the 3 types and their tenure. Quota here is defined. You can define based on the amount of professionals of each type that are added over time. This will track how long they've been active and based on your percentage quota attained over time, this will drive the resulting billable hours. So if professional 10 join in month 8, then they'll reach 20% of their quota, which would be 17 billable hours for low, 16 for mid, 12 for high. and then in the next month it'll be 40, and so on, and that works dynamically through the whole model. These are fixed expenses of the agency firm, so this would be like your executives, managers, recruiters, any fixed costs by month. You would define the monthly cost in each year here, as well as the start month. You can also do some variable costs by professional. So if you're, giving everybody paid for their coffees, training, licenses, there's some costs you could define per month per professional, and that will apply to all the professionals that exist in each year. Startup costs, just this will flow into the first year 0 or month 1 of the income statement. And these would be things non-depreciable. So this was one of the upgrades. So you would not put a building purchase on here. That would go on the CapEx, but this could be like legal fees. Wouldn't do furniture either. It'd be a website maybe. Not vehicles. You'd put like maybe some marketing. Anything that's going to happen before your operations begin that you want to account for, you could enter here. And that will flow accordingly. Debt schedule, this you just define the terms and the start month, which usually will be the month that the model starts. You can define the terms, interest rate. The amount will actually come from the global control, as we earlier discussed. And this flows to the template or the statements. On the exit month, if you did choose a terminal value to be included, if you selected yes, then on the exit month, all the principal remaining will be paid off in that month. And that flows through the cash flow. Terminal value, this just defines, this is a tax thing. If you're trying to separate out taxes on gain of fixed assets versus taxes on the sale of business, this is where you can control that. And so if I put 95% here, it means of the total exit proceeds, 95% goes to extraordinary income, taxed at the regular rate, and then 5% would go to the fixed asset allocation, which you could see here, and that's where all this logic is happening, and you would be taxed on that separately. If you don't want to account for that, you can always just put 100% here, and it'll just nothing will flow to the fixed assets. Finally, the last new schedule I added was cap table. Here you've got you can define the share count, 3 types of shares, Class A, B, and common. You define the percentage of shares that each one makes up. This would be representing a fully diluted share value of your preferred Class A and B. You can also define up to what I have here, 20 slots for outside investors, how much they contribute, the percentage of common stock Class A and B they get if applicable, and then you'll see the fully diluted ownership value over here, the amount of shares that equals implied valuation, and same goes for the owner's side or employees, operators, up to 20 slots, and you can see their total diluted value right there. Now I also added a internal rate of return calc on each of these based on the distributions available and the percentage share of the equity, and it'll be their initial investment, then the 5-year distributions, and the internal rate of return flows to each individual entity. Next up, we've got CapEx. I went through it. Basically, you can define the month of spend, the cost. This is going to be anything that has depreciation tied to it, and that'll flow accordingly. So the cash flow statement, income statement will have depreciation based on the useful life here. Building is always at the top because that's separate, and you define that value separately. And mainly because I wanted the exit value, exit proceeds to only apply to these fixed assets, because the building is it's a bigger item and it's likely going to have its own value that you want to define. We have income statement monthly here, so you got your revenues, cost of goods sold, operating expenses, EBITDA, interest, depreciation, net income. You should note here that on the cost of goods sold, so revenue is the total amount of billables, and then your cost of goods sold is how much you have to pay the professionals, as well as any of the perks you're paying them, which was defined on that cost tab. And then income statement annual is the same exact thing, but on an annual basis. Balance sheet, this is where you get into more of an accounting. You're tracking your assets. We've got non-current and current, which would just be cash and then any fixed assets entered. Total assets, even accumulated depreciation is going to be on here, which is a contra asset. You got liabilities, which is just going to be the loans. So not too complex here. Equity is just the contributed capital, retained earnings, total owner equity, total liability plus owner's equity, and total assets. This is the check. These always balance based on the accounting equation. And you can see, scroll over here, tracks everything over time. And this automatically updates if you adjust the global control to end on a given month. It will update and end on that month and balance. Balance sheet annual, same deal, just on an annual basis. Cash flow statement, you've got operating activities, investing activities, financing activities, and that all flows through the model for 60 months in this case. The annual tab does the same thing, but on an annual basis. Note this cost of goods sold is not relevant. This is for inventory, which we don't have in this business. We can delete that. If we go on, so the matrix tabs are where all the logic's happening for that revenue for as new professionals come on and the amount of revenue they're generating. This is how all that's done on these tabs for each type. Distributions is a discounted cash flow analysis of the project. Also for the investor pool and owner pool, this would be your outside investors, insiders. You can define here a discount rate and get a net present value as well. Executive summary kind of gives you a high level look at all the major line items as well as cash flow items all in one kind of snapshot with a little bit of a visual here. We've also got some ROI, IRR calcs, equity multiple calcs, visuals, plenty of visuals to demonstrate what's going on and the assumptions. We have monthly detail. So this is where all your assumptions are kind of flowing, and this is, you can see the low or level 1 professionals, mid and high end. These would be based on all your assumptions. This is where it's flowing on a monthly timeline, and this is like a detailed view. We still show revenues, fixed costs, EBITDA on this, and this all matches up with the financial statements. You've got some other advanced metrics as well. And then the annual detail does the same as a monthly, but just on an annual basis. So that's every tab. That's what's going on here. Go back to the global control real quick. Purchase price on this $75. I will put it on smarthelping.com as well as some vendor sites, Eloquent and eFinancial Models. Well, it's already there, but the upgraded version I'll be putting on there today, and it's available for purchase. I'll see you guys on the next one.